what I'm just going to do now is just go through our panel one by one. I'll introduce you by name and then take it away, guys. You can have a quick chat. You can introduce yourselves about what you're doing, what your affiliations are, and then we'll go on to the next person. So if I just start off, we'll start with Ruan. Welcome.
Hello, and yeah, I'm very glad to be here. So I'm Ruan. I'm the creator of Seasonal Tokens, and yeah, this is our first Twitter space with invited guests, and it's great to have it. And on the topic of an upcoming recession and the impact on the cryptocurrency market, my first thought is what does the recession mean? Because traditionally, the definition of a recession is 2 consecutive quarters of negative GDP growth. But last year we had 2 consecutive quarters of negative GDP growth, and they said that it wasn't a recession. So this year it's possible that there could be again 2 quarters of negative growth, and it may again not be called a recession. But ignoring the question of what it's called, if there is basically a serious economic decline this year, then what effect will that have on the crypto market? I think that what happened last year, especially with FTX at the end of the year, was that the crypto market was in a state of extreme distress. It was a moment of maximum fear. And I think we're past that now. Basically, over the course of January, there was a recovery in the crypto markets, and the Bitcoin price recovered to 23,000. And that was, I think, happening because the price was too low because of the fear that the collapse of FTX would cause other businesses to go bankrupt because they would have exposure to FTX. Maybe they lost funds, or maybe basically it's possible for a large crypto company, when it goes down, to affect all of the other players in the industry. So we were waiting during December and January to see, would Binance go down, would Coinbase go down, would Kraken go down? And I think those fears receded. And what we're seeing now is basically that the fears are going away. The moment of maximum fear is past, and there's going to be kind of a recovery in the crypto market. But if there is a recession, then that would have a downward effect on the prices. It would obviously suppress the prices. So I think we would have these 2 forces kind of opposing each other. We would have, on the one hand, the recovery, the lack of fear, and the basically the recovery in the market, and that would be opposed by basically harder economic times. People wouldn't have as much money to spend on cryptocurrency, and there would be basically stress from the whole economy. So it's not going to be the case, I think, that we're going to see a disaster of the type that we feared during December. But I think that it could be the case that a severe economic recession could keep crypto prices depressed for a lot of this year. So those are my thoughts on the matter at the moment.
Brilliant. Yeah, I want to come back to you on that one about specifically when you mentioned the harder times and how long we could stay depressed in the market. But let's go for everybody, get everyone introduced, and then I want to touch back on that. Mike, would you like to introduce yourself?
Sure, I appreciate that. I'm Mike Tremont. I'm a long-term economist in the financial services industry, former Washington, D.C. federal government employee. I worked for the White House as an economist for a couple of years, and I've been involved in banking for decades. And at the moment, I'm working with the Libertarian Party and standing for the presidential nomination. But I'm really glad to be here to talk about crypto, because I think this is a really interesting question that you all have posed. And as I see it, it's got 2 or 3 different parts. Number one, will there be a recession? Obviously, that is completely possible, but it's looking more and more like we might be able to dodge that. But we have had a couple of recessions. Ron was exactly right. We had a recession in 2022, quarters 1 and 2, and in 2020, quarters 1 and 2, of course, in a much more dramatic fashion. And whether you call a frog a toad or not, it's still a frog, right? It's still a recession, whether leading economists want to say so or not. And what happens in crypto markets when there is a recession is that the value of cryptocurrencies dip, even relative to other currencies, even relative to stock funds, for example. Today, Ethereum is trading at something like 40% of the equivalent dollar price in the S&P index, whereas it was at something like 125% a couple of years ago. Cryptocurrencies are very susceptible to what happens when there's a recession, and that's because I believe that these markets are very complicated. There are long-term players and there are short-term players, and we need to sort of bear in mind that crypto is a long-term play, so you might have to wait out the effects of a recession.
Very good points, actually. I'm going to touch you on a question later about this. I want to see what you think more about, like, how crypto is potentially being strangled. I know you mentioned a lot of it's long term, but I mean, the last 2 years, looking at DeFi, we've had a lot of short term plays that have literally made millionaires overnight. So I'm curious as to where we think that's going to lead. But I want to bring Polo up. Polo, welcome. How are you doing?
Hey, thank you very much. It's a pleasure to be here. I'm Power, the CMO of Seasonal Tokens. I have been doing marketing for more than 15 years, and I have been doing crypto investing, crypto marketing for more than 3 years now. So honestly, first of all, it is hard to talk after Ruan and Mike and the things that they said. I am afraid that I won't sound that clever like them. But the thing is that I definitely believe that even if the numbers are not showing that we are right now in a recession, like from my perspective as an ordinary person, like I see it everywhere. I see it on the markets. I see it in the eyes of people. I see it when I talk with my guests on the podcast. I see it everywhere. So for me, like talking if it is coming or not is not even a question, because like Juan mentioned, it really depends what do you call a recession. For me, like I said, we are currently in a recession, and it's just not let's say it PR'd very well. What I mean by that is that it hasn't been advertised or it hasn't been published like something that is already happening. And if this happens, then I think the scenario that Ron mentioned is going to happen. There will be a lot of fear, a lot of people selling, less consumption, less investments, and of course, a lot of dips in all markets, no matter if we're talking about cryptocurrency, stock market, house markets, or whatever it is. I think that most of the people will follow the crowd, and this will lead to major dip. And of course, big investors, whales, they will use this to push it even further, so they can then buy cheap. But to recap, I just think that we are already in a recession, and for me, it doesn't make sense to even discuss if it is going to come or not.
Absolutely. We have Jeff Hancock. Welcome.
Hi everyone, my name is Jeff Hancock. I'm co-founder CEO of CoinPlus.com. We're a UK-based FCA registered cryptocurrency asset platform, specializing fiat on operations for GBP and Euro, also stablecoins. We serve retail investors, corporate investors, institutions, all the way up to law firms and pensions, as well as retail investors as well. In the market about 5 years or so. Personally, I got into crypto about 2014 when I was contracting for SoftBank at the Vision Fund. And I've had obviously a long career in tech and cybersecurity, but still I think compared to some other listeners and some other people on Twitter, still quite new to the crypto space in all things concerned. In terms of the market with potential upcoming recession, I mean, a few years ago, crypto was always one of those markets that was disconnected from the rest of the economic space. It kind of maybe not acted as a safe haven, but acted as a way to be maybe circumventive of some of the other macro policies that were happening in different markets. We used to see dribbles of inflows and outflows during certain market events, but I think as time has gone on, we're seeing greater correlation with the greater stock market, and I think just how how linked the crypto liquidity is with other markets is becoming more and more apparent. We have more cash settle futures. We have better on and off ramping. We have institutional clients. We have institutional trading desks. And I think we're definitely seeing more correlation with other markets than we used to. In terms of upcoming recession, or the recession that we're in, depending on where you're listening to in the world, I think for the half of the market that's kind of retail and corporate, that see a direct cost of living from when fuel goes up, electricity, basic services, etc. It definitely has an impact. And I think as time goes on, I think the rest of the market has to be in a more positive state in order for crypto to go into a full-blown rally like we've seen in previous years. This crypto winter has been a pretty long one, a pretty savage one. I mean, from the top in November 21 all went through to now, we're coming up on 18 months. So I think there's also a period in the market we haven't seen before. We haven't seen a global conflict like the invasion of Ukraine going on at the same time. So there's a lot of factors playing into what crypto is doing right now. Personally, I think the pump we've had recently is a bit of a trap. I think it's a good little profit taking opportunity for a lot of investors, but I think we're going to have a bit more of a drawdown again as we get closer to this 20K support. And I can see the crypto winter, or at least the sideways market, continuing till maybe June, July time. But as always, I'm probably the least educated in the room when it comes to trading and macro events. So I just think we need a overall better macro environment for global markets before we see another 30K, 40K, 60K Bitcoin price.
Fantastic, and I agree on a lot of the points there. Val Clayman, welcome.
Great, thanks. I appreciate it. So my name is Val Clayman, and I am the lead syndicator of Ad Valorem Syndicate, where we run 270 plus angels through seed stage startups. I've been an investor for about 15 years, tech investor as of last few years. We invest in SaaS, fintech, blockchain, Web3, climate, wellness, you name it, AI. Previously, I was an investor in single family rentals, and I have been investing through the last recession and through the last peak, which is how I kind of earned my bones. The picture of me in that in my icon is actually from my childhood, where I am a child in Ukraine. We immigrated from there when I was 8 years old. I'm also the founder of Ad Valorem Market. It's a royalty-based NFT platform for businesses and creators. We primarily focus on market cycle timing and recession investing, which allows me to create and add value to my founders. I believe in market cycles very strongly, and they take much longer than positive sentiment allows and what people feel on a day-to-day basis. As far as the question of how crypto and recessions play together, from my experience, crypto is a strong risk-on asset, and in recessions it dips. How far depends really on the person, and it's mainly one person that tells crypto when to dip, and that's Chairman Powell. And for the past 20, 30 years, our markets have been drunk on QE and QT from the Fed. The Fed says jump, we say how high. I was buying properties during the last recession, and it was a good time to buy properties, and I'm a contrarian investor at heart. The politics and news media is covering up many of the factors that we consider what a recession is to be. They try and rename it, they try and hide it, they try not report on it. But thankfully, there's a lot of social media and FUD that, of course, plays into our feeds. They changed definitions of what CPI is. They just changed it last month. But the Fed doesn't look at CPI. They look at CPE. And CPE doesn't lie. What effects will the recession have on the crypto market? More failures, regulations will come, and strong declines will occur. That happens every single time. I am a big believer in regulation, but I also believe in fair regulation. And when regulation ultimately comes, it's never fair. It always starts at the extreme and it works its way towards the middle. Recessions take a long time to mature, and I believe that markets are not factoring in max pain and unrealistic positions with all the players. Things like stablecoins, for example. If you look back into the Volcker times of the 1970s and 80s, yes, we didn't have this much debt and this much interest to pay on the debt, but nobody really cares. We just keep kicking the can down the road until the next administration comes in. So I believe this crypto winter is just starting, and I believe that stablecoins will fail into the regulatory crosshairs, and we we will see real lows, and I predict BTC at 5 to 10.
That's a very interesting take. I am curious to ask you more about your thoughts on that and the stablecoin aspect, because we have just seen BUSD being targeted by the SEC recently. So you might be on something, I think. But yes, we have Ali. You've already spoken already to Jeff, but Ali, would you like to introduce yourself, mate?
Yeah, hello there. So I'm part of the Seasonal Tokens team, community leader, and I'm also a life coach and a life mentor. I work in entrepreneurship and innovation in the center, where we support students to create startups. And I won't take much time of the speakers. I'll leave the time for them. I will just share one thing and a question that is on my mind as someone who is new to crypto. So I was wondering if the market in crypto will behave similarly to the assets market or the stocks market, and will it be exactly the same, or is there a chance for the crypto market to actually behave differently? So that's mainly what's on my mind, and I hope that some of the speakers can address that eventually in the chat. So yeah, thanks, Tears.
No worries, brilliant. We have also got Trinity, but I do believe you messaged me about your microphone. So Trinity, is your microphone working now?
Seems that it's not.
Yeah, no problem. Yeah, Trinity's also part of the Seasonal Tokens team. She's one of our lead sort of development help side, and also runs a lot of our sort of background projects as well. So she's also going to be in here. Hopefully she can fix her microphone soon. We have Move. How are you doing, my friend?
Hey, I'm fine. How are you? Hopefully everything's going well. And how are the speakers as well? Hopefully they're all fine.
Yeah, we're doing well. Do you want to continue and introduce yourself?
Yeah, sure, of course. I'm just curious if you could all hear me. So, hey everyone, I'm Moof. In short, I'm a cryptocurrency enthusiast. I am also a consultant and a Discord guru. I have a few years of experience in the business world. I am very passionate about the potential of blockchain and what we're going on and the future that's coming. I'm also the creative consultant for Seasonal Tokens, helping around wherever possible. As well as I also study and trade cryptocurrencies almost daily. And I'm very social. I'm always ready to have a chat. Well, that's how short I can summarize myself.
Brilliant stuff, and we're glad to have you, mate. Thank you very much. And lastly, we've got a helping hand. How are you doing? Oh, you actually dropped down. Do you not want to speak? I'll let you know on that one. I'll invite you back up. If you do want to speak, just let me know. Just pop it back up, and we'll bring you in again. Cool. Honestly, guys, it seems like we have a bit of a mixed bag here. We have some apocalyptic predictions. We have some middle ground ones, and some more potentially enthusiastic ideas, I suppose. I suppose my biggest question to you now is, what are the immediate next steps? What's going to happen in the market? I know we've seen some people predicting we're going to go downwards now and test the 20K support. What does everyone here really think now for the next sort of month or 2 months? Are we going to go down more? Are we going to stabilize for a bit? When is this big drop off going to actually hit us? And this is an open floor, guys. Anyone can jump in now and jump on in.
I'll jump in if it's all right.
By lanes?
I don't know if I have to introduce myself every time I jump in, but I feel like it's a great question. So, as studying, someone who studies kind of market cycles, you have to really understand that the sentiment plays a huge role in what actually happens, but it doesn't really affect the market. If you think tomorrow is going to be a sunny day, but it's actually going to rain, it doesn't make it happen. So the reality of what's happening in the crypto market is that the centralization of the crypto market has caused a number of rifts in the market. Centralization of stablecoins, centralization of FTX's attempts to, create their own little monopoly, centralization of all these different projects that are pretending to be DeFi but really aren't, is really the ultimate problem. And so when you run everything through yourself, that's not DeFi. And by that means, by those means, you have to create yield in order for your investors to be happy and everything like that. And so you take on risky bets. As those bets start to unwind, people get hurt. And as those people get hurt, they complain. And when they complain, the regulators hear their complaints. And when the regulator hears enough complaints or from serious people, then they start asking questions and pulling on that thread. Unfortunately, the stablecoin thread is probably the main reason why BTC is 10,000 higher than it should be. So stablecoins propped up all that liquidity. And I think that once the stablecoins are going to be investigated one by one, right now it's Paxos, somebody else tomorrow, you're going to see large chunks unravel into the market. When that happens, I don't know. But it really all depends on, the ammo of the regulators. I think that's a worthy perspective.
That definitely is. I think the question is, what do we think they're going to do, right? I know for a long time now, people have been looking at sort of CBDCs that are coming out around the corner. And Mike, maybe you can put some thoughts on this as well when I finish up here. But what do we think these regulators want to do with crypto? I feel like it's a bit of a big mixed bag. I feel like on the one hand, they're scared of Bitcoin and the power of Bitcoin and people having their own sort of freedom of money. But at the same time, you do also get the mixed bag of people who lose a lot of money in crypto, trying to flee from sort of regular financial institutions, losing a load of money, and then immediately going back to the same regulators and complaining after they've ultimately gone into DeFi and lost their money, right? So you are right. I think the regulators do need to draw a line somewhere, because there needs to be some degree of centralization with all things in some capacity. But where is that line drawn, and what are we going to sort of see moving forward? Mike, I know you've unmuted your mic. Would you like to go ahead?
Sure. I do think it's an interesting question, and I do agree that the regulators are chomping at the bit to get involved. However, while I think that they have a short-term negative impact, and very likely over the next year and two, I wouldn't over worry that. Crypto markets can move away from various jurisdictions. There will be negative sentiment generated by regulators, particularly in the United States, by the way. Next year and the year after are going to be tough ones for the Treasury Department and the Federal Reserve here in Washington, talking in ways that make potential investors in crypto markets very, very nervous. In addition to the possibility of a recession, and I do believe that it's not just a recession that can keep cryptocurrency markets depressed relative to, for example, stock markets, but just the threat of a recession can keep crypto values down relative to stock market valuations. Having said all that, I continue to believe that cryptocurrencies and anything else running on their blockchains, right, are long-term plays. And that if you're in the market now, stay in the market. I truly believe that the greater risk to a crypto investor is missing the sudden upside on the other side of, say, a year from now, on the other side of figuring out where regulators are going to go, on the other side of worrying about a recession. There is going to be a run-up in the valuation of cryptocurrencies eventually. I believe that we will have a run-up in the next year or two in a very bold fashion. And then at some point, and I don't know when, but at some point we will reach critical mass in the development of the smart contract economy. And when that happens, you don't want to be off the train, right? You want to be on that train.
1,000%. Does anyone want to jump in on what Mike just said there?
Yeah, I think that's absolutely right. I agree. Could you hear me? I don't see any.
Yeah, we can hear you.
Okay, good. Yeah, I agree with both Mike and Val. I think that first of all, it's very important to pay attention to the cycles. The sentiment does go with cycles, but also Bitcoin itself has a kind of a 4-year cycle that's built into it. So once every 4 years, the rate of production of Bitcoin gets cut in half. It's called a halving. And there was one in 2020, one in 2016, one in 2012. And in the year following that halving, the price of Bitcoin rose dramatically. it takes a few months after the halving for the market to start to respond, but then it seems to go into a bull market that lasts for about a year, and unfortunately it ends in a bubble that bursts and then starts a bear market that lasts for years. And this is it's an interaction of economics and psychology. There's the sentiment on the one hand, the expectation of rising prices and expectation of falling prices, and that interacts with the fact that resources are limited. When people think that, the way that bear markets end is people have this expectation that they're depressed. They think the price is going to be lower in the future. But it's unrealistic when you have something like Bitcoin that's limited in supply. It's unrealistic to think that it's going to be available in large quantities at low prices in the future when the supply is limited. So what happens is that this bearish sentiment eventually runs into the limitation of resources, the fact that there's a finite number of Bitcoins that are available on the market. That economic reality manifests itself. The price it wanders up and down to a certain extent, but when it's wandering down, it's going downwards because of expectations of lower prices in the future and bearish sentiment. That eventually bumps into the limited number of Bitcoins, and then the number of Bitcoins that are available to buy on the exchanges is too small, and then the price has to respond. So what's going to happen next year in 2024 is that there's going to be another halving. And that means that there's going to be at the moment the market is kind of trying to find a stable price of Bitcoin. There's a price discovery process that's going on. The Bitcoin price went too high and then it went too low, and now it's trying to stabilize and find a fair market value. But that process, even if it does find a fair market value, that process is going to be interrupted next year because the fair price of the Bitcoin will change because the number of Bitcoins available from miners every day that's being supplied to the market is going to get cut in half. And that means that in late 2024 and throughout 2025, there's likely to be the same kind of bull market that we saw after the previous halvings in 2012 and 2016 and 2020. So I think that it's true that we are going to have a bull market in Bitcoin, basically because of economic factors that are not going to be, even regulators are not going to be able to change this very much or affect it. I mean, they may be able to affect the total value of Bitcoin, but they're not going to be able to stop this effect from happening. But basically, those are my thoughts on the topic at the moment.
Indeed, great insight, and obviously this happens cyclically all the time, right? But I think if we look back at Bitcoin, when Bitcoin first came out, no one was interested, no one understood it, and then suddenly it got to a degree of mass adoption where it did just go out crazy, and then we had Ethereum come out of nowhere, and from Ethereum, suddenly, I don't know, obviously I'm not part of the government in any way, shape or form, but I think from the perspective of the financial markets, it didn't seem too much of a threat to begin with, and then it just kept pulling market share to Bitcoin and then Ethereum, and then suddenly overnight we had smart contracts and DeFi. And there was 2 years of DeFi, and it obviously was around from about 2016. DeFi started to come out with smart contracts, but I think 2020 up to 2022, maybe before Bitcoin first crashed, they were the golden years, and so much market share was pulled into DeFi. So my real question is, because obviously DeFi won't necessarily go away now unless the government really look into it and start regulating certain assets and certain parts of blockchains that allow these things to happen. But how far will they go? Because Bitcoin's well and truly ingrained now. And you're right, people are getting their supply and they're holding on to it for dear life. That's why I think it sort of bottomed at 15K, right? So the question is, do we think that as the markets continue forward and Bitcoin goes back up and the regulators are now getting more of a lens on crypto, are they going to target DeFi first? Are they going to leave DeFi alone? Are they thinking Bitcoin's the biggest threat here? What's the threat right now? And where are they going to try and stifle it really in terms of regulations? That's my big question.
Yeah, well, I think that actually the regulators are happier with Ethereum than they are with Bitcoin. I think is happening is that the Bitcoin community and has kind of an anti-government attitude, and the central banks, I think, were very alarmed about Bitcoin and the possibility that it might, in their words, destabilize the economy or destabilize the financial system. But really, what they mean is that if Bitcoin was to continue to grow in price the way it has, doing these extremely dramatic price increases every now and then it would threaten central bank control over the economy. So the central banks have a mandate to keep inflation under control, and in the United States, they also have a mandate to maintain maximum employment. So in order for them to fulfill these mandates, they have to try to maximize their control over the economy. And when Bitcoin is this other form of money that is essentially turning into trillions of dollars and growing so rapidly, it was very alarming for them. And I think that they identified Bitcoin rather than Ethereum as their their opponent. And what happened with Ethereum was that when Ethereum moved to proof of stake, it showed itself to be, in a certain sense, more friendly to regulation, as proof of stake cryptocurrencies are actually easier to regulate than proof of work cryptocurrencies, because with a proof of work cryptocurrencies, anybody can mine, an anonymous person can mine anywhere in the world. You don't know who they are, and it's not possible to censor transactions because a miner can include transactions even without the consent of the other miners and so on. But with proof of stake, it's possible to identify the stakers because they have to put a lot of money up front. You can trace where the money comes. Even if they try to remain anonymous, it's possible to try to trace down their identity through the money because they have to put a lot of money there. But in fact, what happens with Ethereum stakers is that most of them are not even trying to be anonymous. They're large US corporations, and they are basically they're going to comply with regulations. In fact, of the Ethereum stakers that are there at the moment, if you look at, there's a website called mevwatch.info. And the website, it keeps track of how many Ethereum blocks are complying with OFAC restrictions. So this is the Office of Foreign Assets Control. And it's about 70% or 80% of the Ethereum blocks that are produced now that are complying with OFAC restrictions. And if that reaches 100%, then that means that essentially the US government has the ability to censor Ethereum transactions. So there's nothing like that happening in Bitcoin at the moment. And Ethereum is, I think, the authorities are basically friendlier to it. So I hope that answers the question.
Absolutely did. And like I said, guys, feel free to jump in.
If it's all right, I'll jump in on that. I completely agree with your perspective. Regulators go after complaints and losses to win settlements with fines. They don't really care if it's DeFi, CeFi, or if you're sitting on Mars writing checks. Gensler has been clear about everyone coming into compliance, but for lack of a better word, that is kind of impossible for many of these projects, and there's still a lot of risk of that being impossible. So my perspective on the process is that crypto projects, blockchain, I don't want to use the word crypto because it actually is blockchain projects. That's what we see come through the syndicate all day. They focus on adding value. Many of the projects that have been successful have a business focus and are focused on creating value for their users. And selling tokens shouldn't be your main focus. Now, while Bitcoin is the granddaddy and the future potential of crypto is in real world use cases, being a bear right now doesn't mean I'm a bear forever. I still see many projects that evolve, work their way into mainstream adoption. We work with many of them. And as the world currency reserve, world's reserve currency here, the U.S. is what other sovereigns look at when crafting regulations. That doesn't mean they listen to everything they say. It's kind of like, we'll hear you out, but we'll do our own thing. Others are not going to violate that relationship. It all goes back to NATO. There's a direct relationship between U.S. economic policy, foreign policy, and global outlook as more countries get involved.
That's indeed very interesting. Where do we go from there, right? So obviously, Bitcoin seems to be the safe bet. That seems to be the general gist, right? And I think Ron mentioned earlier about scarcity and utility. There is no necessary utility with it, but it's gaining scarcity over time. So what can regulators effectively do there? But with DeFi, we're seeing scams left and right, and we have done for ages. We're seeing all sorts of compromised funds with hacks on the blockchain and all sorts. So I suppose what you're saying there is that regulators are getting those complaints and they're now looking to that aspect, right? Rather than targeting things like Bitcoin, which is just doing its own thing.
You have to understand the perspective of a regulator. They're just a bunch of lawyers, right? And lawyers are not going to give you the answer to a question because they have to go through the legal process of understanding what that is. And that in our country, it goes through circuit courts of appeals, various state, federal, all these different processes. And that takes time, that takes years. And so for a regulator, a quick win, a quick settlement is much easier. And they don't care how many necks they have to step on to get that.
Yeah, no, that's a good perspective, and that makes a lot of sense. Jeff, you're unmuted. Do you want to go ahead, buddy?
Yeah, I mean, one of the other aspects that the other guys haven't covered, and again, all of this, I think, all of our points of interest and points of view all kind of match together on what the regulator is looking for. I mean, the role of a regulator in a market is to provide a fair and safe trading venue that's fair for everyone, anti-manipulation, all that kind of good stuff, for the general public to jointly participate in. And one of the biggest factors, I think, especially here in the UK, it comes down to money laundering. Very anti-London, as London's probably one of the largest money laundering capitals in the world. But the pure velocity at where funds can end up anywhere in the world in under a minute is probably the biggest fear factor for a regulator to kind of deal with. You've now got the potential for, I'll stick to the UK because that's kind of where I'm operating in, but I'm sure it's the same for a lot of countries, is that no longer do they have the ability to, accurately or even quickly track where these kind of attacks or scams can come from. Because if they have a list of IP addresses, phone numbers, intelligence, and it was someone doing cold calling to get, funds into a bank account, they've got the ability to kind of track that person down over time and hopefully return funds to people that are affected. But then when you put crypto in the mix, you've now got an attack vector that's outside of its jurisdiction, outside of its shores, and they could be on, on any corner of the planet, absorbing this digital currency for their own gain. So from an anti-money laundering perspective, it absolutely scares the shit out of the regulators. And especially in the UK specifically, is that the regulator is just massively underfunded. The tech moves faster than anyone can really fathom. And not only that, they are a small department that are funded by tier one banks. So obviously crypto takes the end of the line. But as we said earlier about the complaints level, the regulator will respond to those complaints when enough of them pile up. And we've seen a number of dodgy advertisings, whether they were scam tokens, they were guaranteed returns, they were any sort of different article under the sun. Everyone's had some sort of loss in crypto at some point, and the loudest proponents of this all somehow relate it back to crypto, whether it's a romance scam or a cold call or a bad token. It all comes back to one word, which is crypto, unfortunately. What they could be doing better, and this is what I would like to see, is I'd like them to work a bit closer with other departments that are actually doing a fairly decent job. The HMRC, the tax collector in this country, has done a reasonable job on building a framework for crypto tax, on how they put it in with capital gains, and therefore if you make $13K a year, you can basically take that revenue tax free. They should be doing a change soon where staking or DeFi should come under income. But the problem I face at the moment is that when you enter a token into a DeFi contract, they're saying that you're giving up ownership of that token, and therefore you should incur a capital gain when you're technically selling the token into the contract and then receiving a new token when it comes out, which is not really the case. So they're still working on that kind of aspect. So if we get the tax regime kind of nice and situated, I'm sure a lot of crypto people would prefer crypto to be under spread betting or gambling to avoid tax, but obviously they need to be paid somehow, right? The regulators doing not the best they can. I think they could do better. And from the couple of events that I've been at the House of Commons and the House of Lords here in London, is that they are very pro blockchain. They're very pro DLT. They see all of the projects that are being built on chain for identity or for supply chain or for health, as well as some of the payments options. They don't really see it as an investable asset, but they've used the term over and over and over again. And I've told them to rebrand the way they talk to people. They want to make UK a crypto hub. To take out crypto hub, a DLT hub, or blockchain hub, or something else, just not crypto hub, I think they can achieve it. But we need a more gentle touch on the regulation front in order to allow the rest of the market to move up and build better products and increase access to the market. Because while people can still onboard onto a platform from the Bahamas, they are not getting that protection. They are not getting the ability to be heard by the regulator, because they are onboarding with companies outside of the UK. Now, my firm and 41 other firms, actually 40, because Gemini have 2 for some reason, that are registered as a crypto asset platform, we are trying to do things the right way. and we are trying to work within a framework that's given to us. It's not the best, but it's the best we've got. And I think if they keep chipping away at that, we can build a really fair market. We can build a market that everyone can participate in, and that is fairly taxed as well. At the moment, people are probably more concerned over hiding where their gains are rather than reporting them, because the tax regime is not up to spec. So there's a lot of things that can happen, and I don't think it's just regulation. I think it's all forms of government working together cohesively to make the market more attractive to investors to put capital into. When it's attractive for investors to put money into, what do they want? They want volatility. They want opportunity. And I think that's what crypto is presented itself as. Is there is something for everyone. You want to buy and hold something long term, you can buy some Bitcoin. You want to do staking and yield, there are plenty of products out there on the DeFi side. You want to do payments, it's absolutely brilliant for that. And a lot of companies are coming. Most of the conversations I have are all client demand driven. Law firms, they want to take their payments in crypto because they've got clients on the other side of the world. It's faster to do a stablecoin payment than it is to do a US bank transfer. More and more people want to get into this. They just need a bit more protection to feel comfortable.
I think it's spot on there, Jeff. And I think you actually touched on an interesting topic there, which was money laundering. I'm also UK based, and I was self-employed for about 2 years before I actually formulated my own limited business, specifically because the tax, like you said, the framework's a bit all over the place. And it was a bit safer for me having an actual business or a separate entity doing all the work. But that was all fine, all the setup was fine. But even through having a business, whenever I take profit from the business, I have to, I have so much scrutiny just from the bank, assuming I'm money laundering because money's coming from a cryptocurrency exchange, and all my money comes from a cryptocurrency exchange. So I've got, exactly. I've got scrutiny from my bank, trying to effectively warning me that if I don't sort it out, I'm not going to get my money out, and they'll lock my account. So I've had to provide all the proofs, everything I've done, all the blockchain transactions. But then, like you said, like they aren't even the teams who actually formulate and check through blockchain transactions. They aren't necessarily big enough to understand themselves.
Yeah, I think there's the lack of understanding from even the bank side. I mean, for a lot of times, because we deal with, it's the reason we started doing corporate accounts for limited companies from bricklayers, property investors, or a prime one. That we get a lot of applications for. Now it's gotten better over recent years. Like we send a lot of payments out to HSBC. Starling's a no-go anymore, just because Starling is being Starling. But because we have a UK registered IBAN, a lot of our users don't have that problem anymore. Now the funds coming offshore, that's what they still have a problem with, because the checks that might be being done on a European exchange or a US exchange, or God forbid a Seychelles or Panama exchange, are not up to spec with what the UK expects. So a lot of our limited company business owners specifically use us as an off-ramp solution, even if they don't trade with us full time, for that very same reason. They know it's a UK IBAN, they know it's under Clearbank, they know it's an FCA registered firm. So a lot of that sort of scrutiny goes away. But at the same time, we've stopped money muling networks. And what's a money muling network? Just people who don't know. You get 5 users, you give them £1,000 each, they buy some Bitcoin, they transfer it to a wallet, and then the second hop, you move it into the hub, the honeypot. So you've collected, 5-10K worth of Bitcoin, and it's done 2 hops. Unfortunately, we have on-chain monitoring software that can pick that up pretty quickly. Now, when all 5 of those users come back for a second run, they bring 10 grand each. That's your big transaction bit. And when we saw that happen, and they all came from NatWest for some reason, all people in their 40s to 50s, they either knew exactly what they were doing or they had no absolute fucking clue, which boggles my mind. When you trust someone to send 10 grand in Bitcoin somewhere? And we told NatWest, what do you want us to do? And they go, just let the transactions go. Well, we can't. This is a money laundering problem. This is what we're supposed to report back to you. We can send the funds back to you. What are you going to do with it? We'll just return it to them. Don't worry about it. So even the banks at some rate don't really care the money going in for people to lose. It's the money coming out they're more concerned of, which really, really pisses me off.
Yeah, it's an absolute nightmare. And I do think we're working towards making it better over time. I feel like our sort of tax department and the money laundering department are about 5 years behind, but give it time. But I'd like to.
I think.
Oh yeah, so go ahead.
But the tax side, at least they understand what people want to do, and they just want to get paid.
Yeah,
it's simple as that. If we make it fair, people will disclose, and we can do claims on it. Adversely, if you're having a bit of a down bit at the moment, you can claim the capital losses as well. Just make sure you have a good accountant that understands it. I took a capital loss this year on a couple of positions because I had some other gains coming in from some property sales. So it was actually a really good time for me to sell when it was low. I bought the position straight away. but it was a good way to, at least have myself on there as I've reported something instead of nothing. And you've got far less chance of getting reported on or audited if you have that bit of data in the background.
Absolutely. Val, I see you've unmuted your mic there.
Yeah, I just wanted to jump in. I think tax-wise, there is nothing better than being classified as a commodity for crypto. If taxes can be collected, the government will, in the end, permit it somehow because they make money off of it. It's just common sense.
Exactly.
There are companies out there that help you account for taxes. We're running a deal on one. There's others out there already, basically downloading API data, making sure that you can, file correctly, working with accountants. Accountants don't want to see a spreadsheet of an insane amount of addresses or hashes. They don't care about that. They need a simple thing, and there are companies out there that are building that stuff, legitimate companies. With every massive shift in blockchain space, it also autocorrects. And the more legitimacy comes into the space, the better it'll be. One of the main issues is that anyone can create a token and then commingle funds and run a rug pull and, just lose trust, which is a huge violation of trust. And then everybody says, oh, look at crypto. It's all a bunch of scammers. One of the best things that everybody can do is to learn the existing laws and see how you can structure your current or existing business or passion or whatever and align it with the existing regs. Now, that doesn't mean you're going to be able to, because in reality, you probably can't. But as those regs expand and grow, you're on the right side of the law. That doesn't mean that you won't have setbacks. Still to this day, marijuana companies, gambling companies have their accounts being shut down, and it's mostly legal all over the world, right? But still the US is a little bit backwards about that. All it takes is someone in the back office with a little red button that can say, hey, just shut you down because we're a violation and we got this letter or whatever. But you can build in the blockchain space, and at the same time, you can follow those that do. Typically, those companies are not the loudest and always align themselves with traditionally safe and honest companies, existing companies. We have those too, but then there is always someone trying to hide their head in the sand with relation to regs, and that's a big problem, and it doesn't help this industry. And if you want to help this industry, you need to be better than the average, and the average kind of sucks right now.
Yeah, absolutely makes sense. Like I said, I think as we build forward and move forward, and like you mentioned, the best thing you can do is just learn the laws you already have. I didn't realize when I got into this how I got into this back in 2018. And back then, I think Jeff would be able to attest that back then the laws were all over the place, 10 times worse than now. It was very, very grey area. Crypto was. And we just had
the word Bitcoin, crypto, and blockchain were all the same word as far as a regulator, an accountant, or a tax advisor were concerned.
Yeah, it was a bit of a nightmare, and I think it's gotten a bit better now. Obviously now, it's been in a better place, but obviously this is the UK perspective. I don't know much about the US side of things. Mike, would you be able to jump in here and just sort of clarify where the US stands on all this regarding money laundering, ideas of crypto, sort of the regulation? Well, obviously we're going over the regulation aspects, but the tax sort of situation, I know it's a bit different in the US.
It is a bit different in the U.S., and I should not position myself as an OFAC expert the way I used to be 10,000 years ago. But my understanding from my contacts inside the banking industry is that the OFAC officials, Treasury Department officials, are still in a wait-and-see mode. They realize that they need to promulgate new regs over the next year or two. They firmly believe that the greater regulation they can bring to this market, the better it will be for the market. That is a fairly standard outlook from the Treasury Department and the Federal Reserve in all cases. So I think that we need to wait and see what they come up with, but I do anticipate it will be fairly aggressive because they view it as, for our own good, right? And for certain players, it will be. And for certain types of players, it'll cause them to move offshore.
That's exactly what we've had in the UK. Exactly what we've had.
And we've got some audience members requesting to speak. So I'm going to bring some up and take any questions if that's cool with you guys. We have Tommy Brown. I'll just approve you now, my friend.
My stance on this is kind of twofold. I've talked to Mike quite a bit about this at times. I think first off, we as and I'm speaking from the U.S. standpoint, we as a republic here in the United States, we have to get a consensus built that this is the proper way forward. I'm all for cryptocurrency. I'm all for Bitcoin. Blockchain it holds a lot of promise in a lot of areas, but till we as a republic form a consensus that cryptocurrency is the way we want to go forward, I think we're kind of walking a slippery slope because a lot of people are scared of it. I've got people here in the state that I live in that are very concerned with the digital coins or currency that the banks are getting ready to more or less push on people. The other side of this that I'm concerned about from the crypto side is the cybersecurity of it. What what can be done? Let's say that the governments decide to do digital currency, or they do decide to do cryptocurrency. There is no nation in the world, to my knowledge, that has a advanced cybersecurity policy that would defend against this. I mean, we can't even defend the currency we have now against cyber attacks. So, there's a lot to think about. I do believe we're on the right road, but there's going to have to be a serious conversation held between the citizens of every nation in the world, the central banks, the FDIC, and into some points, even the credit unions. We're going to have a serious conversation of the safety of this digital coin, because let's face it, guys, cybersecurity affects every avenue of our lives, and it will definitely affect it will definitely affect cryptocurrency now and definitely into the future.
That's an amazing point. Does anyone want to jump on that? Because that's a really good point to put up there, Tommy.
Yeah, absolutely. So I have something relevant to say about that. So I was on a podcast earlier today, and the topic was a lawsuit that's been filed by Craig Wright against the developers of Bitcoin. And Craig Wright he claims to be Satoshi Nakamoto, the creator of Bitcoin, but that's not really relevant to the case. What he's claiming in the case is that somebody hacked into his computer and deleted stole an encrypted file that contains the private key to a Bitcoin address that has more than $2 billion in it. So he claims that he's lost access to this more than $2 billion, and he's filed suit against the developers of Bitcoin and has said that they have a duty to a fiduciary duty, basically, to protect his assets. That they're in a position of control, and that because they have the power to modify the Bitcoin software and return his money to him by sending it from that address to another address, which he controls, that they have a duty to do that. And that case was dismissed last year, but a few weeks ago, a UK appeals court ruled that the case should go ahead. And specifically in the case, in the ruling that they gave, they said that it's unacceptable for cryptocurrency to remain beyond the reach of the law. And what Craig Wright did, I just discovered this yesterday. What Craig Wright has done in the last few days is that he has his own cryptocurrency called Bitcoin SV, which is very similar to Bitcoin. But what he's done is he's added a blacklist feature to it, which allows miners to receive a court order which has been digitally signed by a court, or it's a recognized authority that can sign a court order it's a machine readable court order that can be fed into the network, and that it would basically, miners who receive this order would reject transactions that try to move cryptocurrency from a specific address. So he's done this with his own cryptocurrency, and because Bitcoin SV forked from Bitcoin, that means that the address that has the $2 billion worth of Bitcoin in it has a corresponding amount of Bitcoin SV in it. And what he is going to do is he's going to ask the court to use the software that he's added to Bitcoin SV and issue a court order to freeze his own Bitcoin SV, because he claims that the hackers who got into his computer, they have an encrypted file that contains the private key that would give them access to this Bitcoin SV and Bitcoin. So what he's claiming is that the money in that address is at risk, and that the court has a duty to freeze it. And what he's going to do is he's going to show the court how to use the software that he built and how to issue a court order to freeze his Bitcoins. And then he's going to ask the court to please freeze his Bitcoins. And the court is specifically the Bitcoin SV that's in his address. He's given the court the ability to issue a court order and freeze that Bitcoin SV. So when the court understands that they can do this, that they can follow these steps, they can issue a court order, they can freeze Bitcoin SV because this blacklist has been added, then the court will understand that if Bitcoin had this blacklist as well, then the court could issue court orders and freeze Bitcoins. And it's what he's going to ask the court to do is to require the Bitcoin developers to add this blacklist feature into Bitcoin. And this won't just affect Bitcoin. It would, if he wins this case, I don't know if he's going to get the money back, but he's very likely to get the court to understand that they do have the power to compel the Bitcoin developers to add this feature, and that the courts ultimately do have the power to freeze cryptocurrencies. And it won't just be Bitcoin. If somebody loses some Ethereum or has Ethereum stolen from them, they'll be able to they'll be able to go to court, and they'll be able to ask the court to require the Ethereum developers to add a blacklist to Ethereum and to freeze Ethereum funds. So this case is going to happen next year. And because the judges in the case have already said that it's unacceptable for cryptocurrency to be beyond the reach of the law, it looks like they want the same outcome as Craig Wright does, which is that cryptocurrency should basically be under the control of the law. And this is, it looks to me like he's likely to win insofar as he'll get the courts to understand that they can seize cryptocurrency, or freeze it at least. So I think that will completely change the entire cryptocurrency world. It will mean greater legitimacy. It will mean that cryptocurrency becomes more like a normal asset. And it would mean, it may be the case that banks and regulators are more friendlier to cryptocurrency if this happens. So we're going to see next year, we could see a dramatic change in the relationship between regulators and cryptocurrencies.
I would like to touch on what he just said, if you guys don't mind.
For sure, go ahead.
You know, in a way, I agree with him, but the problem that I foresee here is, if I've been following crypto and I've been following cybersecurity since 2016. Right now, we have two of the greatest threats to our ways of life in ransomware and extortionware. We have got to figure out a way legitimately to, and I agree with what he said. You know, there needs to be a way to blacklist this, but there also needs to be a way to ensure that, you know, here we go again. We're back to cybersecurity. The ransomware and the extortionware can literally wipe you out with very little or no trouble. It's definitely a slippery slope. And I'm going to end with I would like to hear Mike's thoughts, since he is seeking the Libertarian nomination for president. Mike, I'd like to hear your thoughts on how we move forward as a republic with a cybersecurity policy in relation to cryptocurrency, if that's the way the nation goes. And I'm going to end there.
Tommy, I appreciate you asking. I do think this is a tricky situation. I do believe that we're likely to see the market fragment over the next several years according to various jurisdictions, and which jurisdictions emerge victorious is difficult to predict in advance. I think that there'll be some jurisdictions in which, for example, this case is pursued successfully, and that will, as the other speakers have said, give a great deal of comfort to certain types of institutions and certain types of investors. but I don't believe it is clear that that will suffice either for all types of institutions or for all types of security threats. I'm almost, nauseated thinking about losing $2 billion because you lost control of your laptop. That is something that can happen so easily. As Tommy and I have observed just recently, all kinds of institutions' servers are in trouble in Italy this week on a massive scale from ransomware. Extortionware in particular is on the march, is on the rise. And in the United States, I believe that we are exceedingly vulnerable to this type of attack. These are the kinds of things that present real threats to the development of any market, but could certainly hold back the development of the smart contract economy, which I believe is the key to these markets really taking off. So as I see it, certain jurisdictions will go one direction, certain will go in another, and we will have a competition among jurisdictions to see which one proves the most reasonable and the most valuable for various types of institutions.
Yeah, it's a very loaded question. I mean, if you were to ask me 4 years ago or so about Bitcoin and holding my own assets, I would have said, well, the onus of protection is on the user. I've got this. I'm taking responsibility for my own money. There's no bank involved. Therefore, the expectation of securing my assets and responsibility is mine. But that was a few years ago, and that was before DeFi even existed. And there's so many tokens now, and there's so many eyes on crypto, including, like you mentioned, the cyber attacks and the hacks and such. It is a bit much for a regular person now to be expected to understand what Bitcoin is, how to get Bitcoin, how to secure it, how to keep it away safely, how to bring it back if you want to spend it. So it's one of those weird sort of situations, isn't it, really? I mean, I think it's best to look after your own funds, but I can understand how, you moved $2 million worth of Bitcoin to your wallet because you need to make a big transaction and someone's got some ransomware on your computer and then it's gone. It's one of those things. It's very difficult to mitigate and really look into. Who knows where that's going to go, really. But guys, it's been over an hour now. Obviously, we've deviated a bit from the topic, but I think it's all relevant because I think if there is a recession, I think it will tie into how regulators and lawmakers see crypto and potentially see what happens with the future of crypto from there. So would anyone like to add any closing notes before we wrap this up?
Thanks for the invitation and bringing us along. It's always great to chat on these. I think they're really they're good. They're a bit more personal. Everyone kind of chat shot while putting a personal twist on it. I think it's really informative because when we talk about recession, there are so many kind of aspects to it that are government driven or sentiment driven or macro driven. And I think we had a really cool panel today with some really good differing opinions. But yeah, thank you very much for the invite. I look forward to the next one.
Jeff, it was amazing having you and your perspectives, mate. Honestly, same with all of you speakers. You've all been incredible. And like Jeff just rightly mentioned, the perspectives on here have been honestly eye-opening. The topic is so very nuanced. There's so many layers to it. And the perspectives we've got now are a lot to think about. Guys, we're going to be having these sort of spaces once every 2 weeks moving forward. Different topics, but all generally relevant to crypto. And just as a general note, I'd like to mention that every speaker here, you've all been incredible. And you're always more than welcome to come back to any future panel if you so choose to do so.
Thank you. I look forward to the next space being all about the security issues and the legal issues from courts and the regulatory issues. You've got several discussions lined up already, I think.
I think we've got about 30 topics, yeah.
Thank you very much. It's been great. I think we've learned a tremendous amount from each other.
Absolutely. Brilliant stuff, guys. Thank you very much for joining. And like I said, keep your eye out. We will have these every 2 to 3 weeks likely. So keep your eyes out and hopefully see you all again soon.